Good evening. Dan Fitzpatrick here, stockmarketmentor.com. Okay, Tesla, a big breakdown below the 50-day moving average, and it was on volume. Pretty heavy volume. Okay, so what do we do with this stock? Now, last week, you could see it was 10 days ago, so it was actually a week. It was a Friday, the Friday before last. I had been talking about how to short a stock like this, basically just any short. And what you don't want to be doing is calling a top. You don't want to be predicting a top on a stock like this. There's a lot of folks that are a heck of a lot smarter than you and me who've had their heads handed to them by trying to pick a top on Tesla. I'm sure you know this. And so we're not going to do that. Haven't done that at all. I've always said just respect the trend. A lot of times, most times, it lasts longer than you think it will. Now, today, and I put this into our strategy session to help our traders get set up for tomorrow. But today I mentioned that there's, even while, I'll give you a little bit, the S&P is still within trend, mid caps still doing okay, this doing okay, this doing okay, this new high, so it's all good until you get to the NASDAQ 100, and now that's not so good. So there are kind of a few chinks in the armor here with respect to this bull market, and I look at the NASDAQ and some of the stocks that are down today decisively. This is kind of a big deal. We'll get back to Tesla in just a second. I noticed that Shopify reported after hours, and it's down a bit on a secondary. Now, that's not that big a deal. I mean, hey, man, if my stock was up like this has been for the last year, I would be selling more shares too and say thank you very much. Frankly, I don't know why Tesla didn't do that all the way up. People had still bought the stock. But so we're seeing some of these high flyers start to roll over. You can look at Amazon and see the same thing. So how do we take advantage of this and short the stock? Well, what I was describing back then is a lot of times, people look at this type of thing and they say, oh, break down to the 50, I'm going to short. So they short right here, maybe at the first part of the day, and that's fine. But maybe you look at this and say, all right, I'm going to short this stock because it's a big trend break. Well, remember, uptrends last longer than you think. And how many times have you seen, certainly on Tesla, but just on stocks in general, where they break down, and then they suck in all the shorts, and then they run back up again. It's called a bear trap, where people see the stock, they rush to sell, they short the stock, but it's like, oh, I got to liquidate my positions. And then once they do that, a lot of times you'll see these buyers coming in. I mean, hey, this is Tesla, and a lot of people look at this as a great buying opportunity. And maybe it will be. I don't know. Neither do you. You can, if you're a Teslonian, you're a Musketeer, you think Elon Musk is like Tony Stark, only a lot smarter, then you think this is the mother of all buying opportunities and you're in. And again, you may be correct. You may be correct. I'm not saying anything to the contrary. But on the other hand, if you think that Tesla is overvalued, et cetera, you're going to sell the stock. You may even short it. But then if the stock starts to rebound, those that think Musk is a smart Tony Stark, they're going to be piling in. That's going to push the stock higher. At the same time, those that thought Tesla was overvalued, they see the stock start moving, they go, oh crap, I sold too soon, and they're going to be buying. So that leads me to this important point about shorting. You don't short the first break. You short the first failed attempt to get back above that breakdown. So in my view, and I shorted Tesla today, but it was only for a day trade. It was literally like for an hour and a half, and then I'm out because this is my preferred method of shorting, and it's not the only way, but this is one that Mark Minervini uses too. You get a stock that's broken down, and then when it comes back to test the breakout or the breakdown, that's when you short, right? Wrong. No, it's when you watch it, and then once the stock starts rolling over, if the stock starts rolling over, that is when you short the stock. You're shorting the stock right here. And the reason why that's a good place to short it is because it's back very close to where it broke down, and it is giving you evidence that that breakdown is truly a breakdown as opposed to just a sell-off that's going to be recovered. And so your oh crap, I'm wrong level is very close to where you shorted. So you've got your entry here, your buy stop there, which is a heck of a lot better than shorting the stock down here. And then where are you going to keep your buy stop? You still have to have it here. Okay, so anyway, I hope this helps you. Just remember, any fool can short a stock when it breaks down, but it takes more to shorting than just shorten the stock when it breaks down, because a lot of them recover. And if they didn't recover, then wouldn't trading be pretty easy? And if they didn't recover, there would be no uptrends. There would just be stocks that scream from 0 to infinity in a day. So you have to have a process that works for you, and then you have to follow that process flawlessly. If you don't, look, you're just an action junkie and you're slinging stocks around, and that's fine. There's nothing wrong with that as long as you know what you're doing. But you're not trading. You're a stock enthusiast. Okay, so don't be an enthusiast, be a pro.